Hi guys, welcome back to the Market Monitor. Let's start. I'm sorry for the delay today, but I was just unable to record a video yesterday, but I thought that I would still record one because there was quite a few things that I did yesterday in the market. So I think it's a good learning for all of us to go through and understand what's going on, what's gone wrong, and what's gone right. All right, so the CNX small cap index is still range bound. It's been now around 8 to 9 days of the small cap index remaining in a range, remaining in a consolidation. Now, these are good things and bad things. The good reason is that the more the market consolidates over here, the more it will be able to absorb these supply levels, and the more the chances of us entering another bull rally. Right now, I've said this before, but we will not say that we're in a bull run till the time you're above you close above these levels of 19,700 whatever, right? So the idea is that we need to ensure that the consolidation takes place at the same time you don't leak below the 20-day or the 10-day, etc. And also, if you want to start moving up, then you do so with strength. It's not that you go up for a couple of days and then you fall right back down. You don't want that. You want it to consolidate, move up, and then move up with strength, like a rally, like maybe like something like this, or the actual rally, what it would look like would be something like this, right? Where you're basically supporting the 5-day and then you're moving up and up and up and up. So that's what a bull run would look like. Right now, we're in a choppy phase over here. Even if you make decent gains, you're actually outperforming, right, the market. Like if we have a look, the small cap index in the past 6 months is up 4.7%. So if you look at your performance in the past 6 months, if that's better than 4.7%, so then you're outperforming the market. This 3-month thing is kind of, you can't really take it into consideration because that would basically be from what? Like from these levels. So I wouldn't take that into consideration. Otherwise, you're at par with the index. But yeah, year to date, you're like 1% up. So as long as you're outperforming the index by even 1% on your portfolio, you're doing good. So there's no need to worry over there. Anyway, so now what happens is that in this kind of market, right, the issue that takes place over here is that the markets are very sectoral in nature. And now, when I say sectoral, I don't mean that there are 10 stocks from one sector like we saw in this defense rally and power rally over here. It's being very, very difficult, right? You're getting maybe 3 to 4 setups every day. And out of that, maybe one from the strong sector. And that too does not have a complete chance of working or not working. So let's get into all of that as well. Just before we start, I would like to say that I made 2 positions today. One was in QPOWER, and this was just a textbook institutional flag. It's very easy to see. The idea is that QPOWER was actually broke out, I think, on this day, 9th June. Yeah, and I skipped this stock. The reason being it gapped up. Now that gap up cost me around 53%, but we don't look at it that way. The rules are the rules, right? That's how I look at the stock market. Now over here, it opened at these levels. I wanted my buying to be somewhere around maybe 475 or 470-ish. It gapped up above my levels. Sure, there's still a pivot at 482. There's still a pivot at 490, and maybe I could have also taken the stock in a smaller size. But regardless, I think I would have been stopped out over here, right? I believe I would have been stopped out over here, considering the way that I trade stocks. Anyway, the markets were not good, but this has been a constant outperformer in the stock market for the past, well, a month or so. The stock is up, what, from its pivot? Now it's up 69%, 70% from its pivot, right? And this is the move that I caught. And also, I made a marking that the stock has a tendency to ride the 10-day moving average. We've seen these 3 times now: 1, 2, 3, and 4, and 5, actually. 5 occasions where you're riding the 10-day moving average. So it tends to ride the 5-day on its up run, but supports from the 10-day. So if this stock today is to make another move up, right, something like that, or maybe just make a move like this and then break the 5-day moving average, I would look to sell 70% of my position and then let it continue to go along with the 10-day. Now the stock is up, what, 104% in 51 days, so have to take that into consideration as well. But we've seen this time and again in the markets that there's no level that's too big, and that there's no percentage move that's too big for a stock when it is really bullish. So another good thing is that this is the highest ever volume, 806 crores traded, barring the listing day, which was a little more in terms of absolute numbers. But yeah, this is the highest volume that's come into the stock. So that's pretty good as well. And the reason why I'm saying it's good is because it's not a sign of distribution. Now, had Q Power closed at these levels, right, then I would say, okay, now these are not good signs. The reason being, you've had highest ever volumes, and at the same, barring IPO day, highest ever volumes, and at the same time you've closed in your mid levels or in your lower third. That indicates distribution, that people at the top have looked to exit, and when I say people I mean institutions, have looked to exit their positions, liquidate their money, because they've seen such a big bull, such a big run, and now the stock is dangling here, so the chances of breakdown are higher. An example, I'm not sure, let me have a look. Okay, so this is what happened in Masdog. You saw this big 19% candle. Next day, a big distributive tape. Shaw sets up again, but fails. But this, I think RVNL is a better example, if I'm not wrong. Yeah, so this was up 12%, again distributive tape, and yeah, I'm not able to remember the exact name of the stock that did that, where you had a middle, a mid close and then you sort of broke down. But if it comes to me, I'll talk about it in today night's market monitor. But anyway, so I bought Q Power. Stock is risk free, no problems at all. However, I also had a position in JGCam. Now here is where I think I made maybe a bit of a mistake. So firstly, what I realized now in hindsight, and everything in trading is in hindsight, and that's completely okay. It's part of the game. First thing I realized is that the small cap index has been range bound, right? So it is not necessarily conducive for swing trading in the first place. So a 10% position is fine, however, only in sectors that are strong, which would be power and IPOs. Now, JGCam sure has given a very good move, right? You see buying of 183 crores, 527 crores, and then you see this consolidation. However, this stock, and the third reason is that it didn't have an inside day. So had this stock, waited for one day, I think the chances of this stock successfully breaking out would have been much higher. Let me show you what I mean. So had this stock basically moved like this, right? At the same time, what happens is that your 5-day moving average catches up, and then you are having more conducive reasons to start breaking out and breaking out successfully. So not a conducive environment, not an A plus setup, and not an A plus sector, and that's the reason I think that this stock squatted, irrespective of it being up 7% at one point. And I think that's the reason why I maybe could have not taken this trade. I got a 3% stop in this, which is again not an issue at all, part of the game. But the reason I'm saying that is because I feel like if the stock was from the strong sector like we saw in Q Power, and a good setup like we saw in Q Power, then the chances of a successful breakout would have been higher, in my opinion. Along with that, the markets are not conducive for swing trading in the first place. So maybe JG Chem could have been avoided as a trade, but that's no problem. We live and we learn. And yeah, Q Power has basically anyways like accumulated all of those loss, like whatever the loss was, way more than that, and already in profit. So there's absolutely no issues in terms of a portfolio impact. But I'm trying to be the best trader in the world, so such mistakes should not happen and probably would not happen again. So that's the way that I'm looking at the markets. That was Q Power and JGCam explained, small cap index. Now let's get to some of the stocks that I have my eyes on. SCI was a really nice stock that I was looking at. Yes, very, very beaten down for sure. However, the only reason I was kind of interested was because of this highest ever volume of 1,960 crores versus an average of 196 crores. So that means that you're 10x the volume. After that, you form a nice sort of flag, 50 days greater than 200 day, you're in the golden cross, you have news flow. But now the stock has leaked. If the stock was to break out yesterday, I would have taken a position. However, again, in hindsight, I'm kind of glad that it did not, because I still feel like the stock would not have had the most conducive breakout because of the reasons I just mentioned with JGCam. Another stock that I'm really keen on, JP Power. I'm really, really keen on this stock. It's near its these levels. 24 is, I think, it's all-time high. I'm not. Oh no, it's not. Okay, it's not. It's not. At least in the recent times, this high. So you're making a good base here. High with liquidity, 253 crores. But again, my only thing is I need to see where the 5 day catches up to. Like, let's say the 5 day catches up till here, right? Then this becomes a 3% stop for me from entry, which is okay, dealable. But if the 5 day does not catch up, then I need one more day of contraction, because otherwise, from these levels, this stock is very, very wide. It was a 6% wide bar yesterday, so that is not good. So, another inside day in the stock, and this stock becomes picture perfect, just like we saw in our power over here. This one last inside day was required, and then we saw a movement inside day in the terms of the body, not the wick. And that's what I want in JP Power. Will that happen? I do not know, but looking forward to it happening. Otherwise, I will see where the 5 day catches up to, maybe take a smaller position over here. Not too sure. We'll have a look. Apart from that, I can't really see anything in the markets apart from JP Power, to be honest. Vari is looking really nice. Again, in Vari, if I get some consolidation on the right hand side, maybe a day or two, 10 day catches up, 5 day catches up, and I'll be in the stock. It looks like it's really troubled retailers. A lot of retail eyes on this stock, and I feel like all of this is just making it lighter and lighter and lighter. So let's see what happens. Not too sure, but I probably will not buy this if it just decides to break out tomorrow. Then I'll look to enter on the flag, because I need that consolidation, because that increases the chances of breakouts. Apart from that, Technoe, nope, already broken out, not anything good. Alpex Solar, now this is something that I liked. A good shakeout over here, high volumes, but it was a shakeout, you can see with the close. And yeah, it was inside yesterday. I think saw it did not break out. No, not yet. It has not broken out, but I'm just not getting the, that feeling from the market. Also, it's quite low in terms of its volume, just 14 crores on average. So that's not something that I'm keen on. And yeah, Ratan India should have waited. It should have waited inside. This stock has not been a good stock. Like, the way that it moves is very erratic. It does not want to wait where it should wait. It does not want to wait. Over here, we are up on 567 crores of buying. You wait inside for 2 days. You're conducive and you're basically guaranteed a good breakout. But nope, you decide to move up. Then you give another day which high volatility. That's all right. Still wait for 2-3 days here, and then you're ready for another good breakout. But no, you decide to move again and you squat completely. So that's why I'm not taking a single trade in this stock. And yeah, KRN is another stock that I'm really liking. I like the action in KRN. 800 crores of buying on the 7th of July, then followed by 234 crores, 63 crores, 63 crores. So this is picture perfect institutional accumulation, followed by retailers basically exiting, because you see a good 14% move and you're like, okay, let's move out of here. But we still need maybe another day inside here, and then you're sort of ready, because this outside day was not good. If the stock was to just wait in here, it would have been better. But yeah, apart from that, Sambar Steel Tubes decided to stop me out, move 20% from there, no worries at all. Transrail made an outside day yesterday, not too good. ProStorm has been insane movement from here. You're up 35%. Make a flag over here, but you've been moved to 10%, which means likely move to 5% pretty soon as well. So not too sure there. Apart from that, to be honest, there's nothing in the market right now. I feel like it's important not to just enter the markets whenever we feel like. Enter them when the environment is good, when the sectors are good, and when the setups are there as well. So I'll just be managing QPOWER, have a look at JP Power, not too sure about that. And KRN is also something on my list, but it needs to wait. So yeah, JP Power maybe. Apart from that, nothing else. I don't think so. I think that should be it for today's Market Monitor. Thank you so much. Sorry for the delay, and I'll see you all tonight. Thank you.